Good morning, everybody. Welcome to the 5th Asia Finance Forum. Welcome to our opening session. And without further ado, we have some amazing speakers this morning. And I would request actually the Vice President for South, Central, and West Asia at the Asian Development Bank to deliver his opening remarks. He joined ADB actually only in January 2024. So it's his first Asia Finance Forum. So he's excited as us about this forum. Please give a warm welcome to Mr. Yingming Yang.
Distinguished speakers and esteemed participants, on behalf of the Asian Development Bank, I'm delighted to welcome you to the 5th Asia Finance Forum. During the 3 days forum, we will explore 3 key themes at the heart of today's financial sector: bridging finance and sustainability, building financial health and inclusion, and leveraging financial technology to support inclusive financial sectors. Each day will focus on one theme, beginning with keynote and special addresses, and a plenary panel discussion to frame the discourse around the day's theme. Thereafter, we will divide into 3 parallel sessions to examine specific topics. And to close each day, we will all reconvene for a series of innovative lightning talks from leading experts. Today, we are honored to welcome esteemed leaders and experts in the financial community. From our day one lineup, I want to thank Dr. Muhammad Faiz Azmi, Executive Chairman of the Security Commission Malaysia, and Lin Javier, Deputy Governor of the Banco Central and Filipinas. Special thanks should also go to His Excellency Tan Si-rung, Secretary of State, Ministry of Economy and Finance, Cambodia, Lilia Sirakoyan, Deputy Minister of Economy, the Republic of Armenia. We also warmly welcome all other distinguished guests joining us throughout the forum. Your presence here underscores the importance of a collaboration between private and public shareholders as we are tackling the escalating threat of climate change in developing Asia. While climate impacts are global, developing Asia is bearing the brunt of climate shocks and risks. Over the past 2 decades, the region has suffered more than half of the world's disaster-related losses, most of them climate-driven, costing hundreds of thousands of lives and trillions in damages. Left unchecked, high-emission pathways could reduce regional GDP by up to 17% by 2070, driven by rising sea levels and declining labor productivity. ADB recognized that the combined efforts, the public sector, and the global development community is not enough to meet the financing gap. Therefore, ADB is actively supporting the financial sector in advancing sustainable finance and leveraging private sector financing. This includes long-term funding through loans and bond issuance for banks and non-banking financial intermediaries to expand green mortgages, increased access to finance for small and medium enterprises to green their business, and long-term deadlines for sustainable infrastructure. In parallel, ADB is helping to deepen domestic capital markets through green and sustainability-linked bonds and sukaks in countries such as Pakistan, Uzbekistan, Sri Lanka, and Bangladesh. In India and Turkey, ADB support is also fostering green and resilient infrastructure financing. ADB also issued its own thematic bonds with $8.6 billion outstanding green bond and $425 million outstanding blue bonds at end 2024. These bonds finance renewable energy, agriculture, natural resource management, and marine pollution reduction. ADB is closely working with DMCs to explore and advance parametric agriculture and heat insurance pools solidarity funds, and credit-linked risk transfer, alongside enabling regulations on risk-based capital and reinsurance. ADB also uses partial credit guarantee to support wind and solar independent power purchasers, and for critical mineral projects in DMCs. For example, we approved the Uzbekistan Solar PPP program, guaranteeing a letter of credit from investment-grade banks to mitigate payment risks from the state-owned off-taker, resulting in competitive tariffs and up to 1 gigawatt of solar capacity. In Pakistan, ADB is leveraging guarantee to support local government equity contribution in the Reko Dik copper mining project. ADB's catalytic role goes beyond financing. It advances good policies, knowledge sharing, and capacity building. Examples include ADB's support to the ASEAN Capital Markets Forum in developing regional sustainable finance frameworks, such as the ASEAN Taxonomy for Sustainable Finance and the ASEAN Transition Finance Guidance. ADB is also supporting Asia Green Transformation Consortium initiative, launching with the ASEAN regulators, Japan FSA, and the GFANZ, and the leading private institutions to help scale transition finance flows and investment opportunities. Through knowledge sharing and collaborative forums, such as the Asia Finance Forum, ADB can foster crucial connections among policymakers, financiers, innovators, and thought leaders to explore innovative and transformative solutions for solving complex challenges together. I encourage you to engage, share your insights, and challenge conventional thinking. Our discussions today and over the next 2 days are not just exchange of ideas, but call to action. I look forward to productive, fruitful, and practical interactions. Thank you once again.
Thank you very much, Vice President Yang. And now it's time for our daily keynote. We have a keynote every morning, followed by 1 or 2 special addresses. So, kicking it off today is actually the CEO of IIFL. He stands at the forefront of India's affordable housing finance transformation. He brings over 25 years of experience, and he has pioneered a technology-first approach that reimagines how housing finance reaches underserved segments. So, ladies and gentlemen, please give a warm welcome to Mr. Monu Ratra.
Good morning, and thank you so much. Thanks to ADB for inviting me over, and especially to Susan for making me stand here, although I wasn't very ready, but yeah. Thank you so much. And I would just like to extend that I represent an affordable housing finance company from India by the name IIFL Home Finance. I would just be walking you through a bit of our journey, and I think the journey for India in housing, which I think has been quite spectacular and a lot of inspiration for a lot of the developing countries as well. Yep. Yep. We can go ahead, please, unless if I have a, yep. Can I have the presentation, please?
Please show the presentation. Thank you.
Sorry, I'm not able to operate this. Okay. In India, the demand for housing has been, I would say, much more than the population of quite a few countries in the world, I would say. That's the kind of housing shortage we have. Sorry, it's okay. Could somebody help me with this? Okay. So the slide shows, yep. So India's 34%, we have 140 crore people in India, and almost 34% of them stay in the urban areas, and 66% stay in the rural areas. And this is expected to be almost, this 34% is expected to go almost about 50% by somewhere in the mid 2035 to 2040. And within the urban areas, the vast majority of the population stays in the EWS and LIG segment. EWS is economically weaker section, and LIG is the lower income group. And MIG1 and MIG2 are the middle income and the high income group people. The 65% of the population which we have in the EWS LIG category, and the housing shortage is 90% of this housing shortage is for this segment. That's the kind of, the lower rung of the Indian population is devoid of housing. We are seeing a complete upsurge of urbanization and migration of population happening to the urban India, and which is putting a lot of pressure on housing. And this is one of the challenges I think any developing and the developed, near developed countries are facing. So, I think one of the key things which we need to see, we feel there are three aspects of this. The first aspect is of keeping this housing affordable. And I think one of the largest housing programs in the world, I would say, was commenced by the Indian government way back in 2015, which was called the Pradhan Mantri Awas Yojana, which is the Housing for All mission, which the government started. And in that, there were two aspects of this. One was the credit-linked subsidy scheme, which was launched by the government, especially for the EWS-LIG, which created affordability for the Indian population. And we, on the private sector, were the kind of conduits of transferring this transmission of this subsidy to the end consumer, and so that the affordability could come in. The second part, which India has been grappling with, is financial inclusion. Obviously, you want to give housing, but if the credit doesn't reach the people who need housing, what would you do? So the inclusion has been a big, I would say, a gap for the housing to come true. One more mission by India way back in 2012 to 14 was, one was this mission of the social security number, which is called the Aadhaar, which was to have the clear identity. It's again one of the world's largest public programs ever done on the planet. And second was the aspect of opening bank accounts for the Indian population. So there were no bank accounts, there was no social security number for identification. So these two things happened in the late 2009-10 and the early part of 2010 to 14. And this really boosted a lot of inclusivity, and for the financial companies to be able to extend credit for them. So the second aspect was inclusion. The first is affordability, second is inclusion. The third aspect is about sustainability, right? There have been a number of initiatives, again, by the government as well, to see that how do they transmit the sustainability at a very, very cost-effective level. Very recently, last year, a program has been launched for PM Suryodaya, which is primarily to provide rooftop solar for houses across this country. And we on the private sector side, I'll be talking a bit in detail of what we have done there, was also the aspect of creating an ecosystem and creating education and capacity building. And we have collaborated with ADB as well on one of these missions. So there are three aspects of from demand to supply, which is the affordability, inclusion, and sustainability. These are three aspects of it. And there's a role of the public sector and of the private sector as well to take this forward. As I said, the public sector role, because I believe in any country, affordable housing cannot be driven primarily just by the private sector. It's a very big public sector role in this, and I think they've done phenomenally well all across this timeline, which I'm showing to you, from how they really took this to a different level, and they have touched all the aspects of affordability, inclusion, and sustainability, as I mentioned again. So they launched two programs. One was called the PMAY Urban, and the other one was called the PMAY Rural. So that ones they wanted to cater to the 35% population and the 65% population as well. And they also exhibited through these lighthouse projects. They took 7 projects across the country to showcase that how sustainable projects and affordable can be done. So it was to encourage the research and innovation side of it, because in India, the developers who build homes, especially the affordable, they are devoid of the technical know-how for that. So the government has been taking care of the financial part of it and also the sustainability part as well. So in India, there is a very large population which builds their own houses, right? They're not only just dependent on the developers, and the ecosystem which is called the borrower-led construction. That means they already own a piece of land and they would like to build on it. That's the vast majority of affordable housing which gets done in India. So they created programs which are focusing not only the developers but also the self-construction as well. And similarly, they have created a very wide network of the primary lending institutions spread across the country which can provide the credit as well. And very interestingly, they also got into construction themselves. The government themselves have come up directly or with public-private partnership to provide housing for people to afford these homes as well. At IFL Home Finance, we just mirrored the opportunity out there to what we did at our end. Housing finance, I'm sure in most of the developing countries, same goes for us as well, has multiple challenges. Demand is not an issue. There's an innumerable amount of crores of houses to be built, so demand is not an issue. It's about how a housing finance company can say sustainable, profitable, and scalable. That's a very complex task. So demand is never an issue in a country like ours. So we did, because one of the issues which you can't take away is that yes, people need home. At the same time, they also need to have sustainable cash flows to pay back the credit, right? So as a lending institution, you need to be sensitive about the repayment capacity as well, because it can't be just the one-way traffic. So we did design some products, because almost 95% of the Indian population works in the informal sector. So how do you do the credit assessment for those people? It's a very large country with 29 states, I'm sure equivalent to a continent, maybe. So how do you create operating matrix, which is very, very cost efficient to be able to do that? So you need to have tailored products for informal income. You need to have the operating leverage also coming into play. So we are a fairly technology-driven housing finance company, which really brought our operating cost way below the market, and our cost income ratios are one of the lowest in the country, which allows us to sustain and scale at the same time. And obviously trying to learn through the credit history of our customers so that we can have a very technology and data-driven underwriting. So far we've been able to give first-time home buyers, and largely being women, about 4.5 lakh people so far. We have an application which is in-house developed. We have a very large technology team of nearly 150 people, wherein we can do the basic underwriting of every customer within 30 minutes, which was very important for us to see that you bring the operating matrix also very much in check. And we have spread over 370 branches across the country. And around 45% of the people whom we have lent to are from the informal sector, which was again something, a huge learning for us to take it forward. In the last credit link subsidy scheme, which the government launched, we were able to give subsidy to 73,000 people worth nearly about 1,700 crores, which is about $200 million to our customers, which made it affordable for them and much better for that. And the borrower-led construction, which I mentioned to you, is the self-construction program of the government for the economically weaker section. We were able to give to about 27,000 people on the borrower-led construction program as well. These are like very complex things because they're very, very small loans, geographically very widespread. Cash flows need to be assessed very carefully so that the money comes back as well. So I think India is a massive opportunity. I think maybe one of the few countries in the world where more of India has to be built than what it is already built. Unlike in the West, which is more retrofitting and you're just redoing the existing buildings, we have to construct as much India more than what it already exists. So it's a new construction has to happen. So it's important that all facets of the new construction is well taken care of. So we at IFL Home Finance have tried to cater to everything, all facets of it. Finance I've already discussed, which is there, right? So, and we are also trying to ensure the sustainability part is also well entrenched into our tailored products. And we've been working with ADB as well, and which I'll be showcasing in the subsequent slides as well. So the phase one of the ecosystem was about, there are two parts. One is the developer-led construction. The phase one, what we did was trying to ensure that the developers get the right education and they understand how the rating system works, what are the design elements which have to be put up as well. So the phase one was targeting the developers is what we did. And we did certain programs whereby we were first educating the developer. Secondly, on the facet of design, all the facet of certification and financing. So we did all the three aspects as a housing finance institution. Then we realized once we just were promoting them about the whole concept of green housing, we realized that the developers had a gap of how would they take this forward to certification. So we created a captive team, which we called as a green value partner of sustainable and green architects, which would shadow these developers to get their project certified. So we have about 20 people who are well qualified to educate the developer that how he should make green housing. So the green value partner was born. And then this program of Kutum, which was our a program of promotion and propagation, was also initiated. So far, we have covered nearly about 2,000 developers across the country. And this is one of the programs which we also collaborated with ADB as well. So this was the phase one of it, focusing on the developer-led construction, which was there. And then we came to the second part of it, which was the larger part of it, which is the self-construction part. This is our phase two of our plan to how do we cater to give affordable housing and also create an ecosystem that they know they are sustainable houses as well, which they are making in the self-construction part also. So we've created an entire ecosystem of it. The same things we changed. We have, along with partnership with ADB, we have created a Kutum app, which is all the applications of how you have to build self-construction greenhouses is available on this app, and it also has an impact calculator. And we mutated our Kutum for more self-built homes than from the others as well. And we also are trying to map the materials with the climatic zones. India is a very vast country. It has 5 climatic zones. So one of the big challenges for India, and I think there's a lot of work which I'm sure institutions like ADB and others can do, is about customized certifications for every climatic zone and map the materials there. Because you can't have a very generic certification and the materials, otherwise it turns out to be very expensive, right? So this is one area we are working. And we have also published two publications for us. One was on the generic, on the developers. The second one was for the self-construction as well. I know I'm running short of time. It's just about under a minute, so I'll run fast as I can see, right? So we've created the intellectual property of 2 books which are there, and I'm also carrying some of my QR cards, which I'll keep on the table, and you can take it. And this is, I think, one of the very unique works we have done, along with Mr. Lal, who's a sustainable architect, and IIT Mumbai, to create a matrix for measuring these self-construction homes for the impact as well. So I would skip this a bit. And we did a technical assistance program with ADB covering 3 facets of it: promotion and propagation, capacity building, research and innovation. This is again, I'm sure it's available. It would be available in the ADB repository as well, but I'm also carrying the QR code of the book as well, which is, I think, one of the unique things which was done in collaboration with ADB in India for sure for the first time. So where we collaborated with them to cover these aspects as well. And we have created a very interesting DIY toolkit for the self-construction homes to just go through it. And it is very, very graphical and pictorial in nature, so that any kind of person can understand this very easily. And this was done in collaboration with the most reputed institutions in the country. And we had the facility of 58 million, 68 million in total. 10 million was for the concession loan for the developers. So the supply side and on the demand side was the ADB fund impact, which we did with them. And I think the way forward, so the first thing, again, now the government has come up with the cradling subsidy plan 2, in which they are trying to have a further focus on the second subsidy scheme, which is there. And they've also brought in one more thing for actually encouraging the financiers to onward lend to affordable housing by a credit risk guarantee fund. That means you will be guaranteeing the loans if they are taken in that manner. And also, we think while you're giving housing, you need to also give them cash flow based loans, so which will be MSME portfolio, so that they are sustainable for their livelihood as well. In terms of inclusivity, again, I think we would be seeing lot of last mile and materials which need to be taken forward for this as well. And so we've been working with multiple institutions across, and we've been fortunate to be able to have a lot of technical know-how and also funding from multiple institutions across the globe. And we look forward, and our next mission is we can take this 4.5 lakh houses to 1 million homes in the country. Thank you so much. Thank you.
Thank you very much, Monoji, for this impressive journey you have shared with us. Unfortunately, not enough time, but as you have heard, there are QR codes there. There's also an ADB collaboration, so you can actually learn more easily. Thank you very much, and you are around with us here for the next days, so if you have any questions, try to find him. Before we're gonna have our first panel and have a deep dive in the topic on sustainable finance, we're gonna take a group picture with our speakers. May I request all our speakers to come here on stage for a group picture this morning? Sean, Mono, and VP Yang. So for all speakers who are taking part in any session, we always take a quick picture at the end. So please don't run away too fast. I think we are complete now. Thank you very much. And may I request the moderator and the panelists for the next part of the opening to take already their seats. Maybe we can see the backdrop slides so they can see. Yes. So, as you can see, we are going now to have our first panel. We have one panel, talk show style, every morning. This is a panel where hopefully the conversation is so interesting that you don't want to ask questions because we don't have time for that. So no pressure for our moderator. And you can see it's about unlocking sustainable development through promoting a green transition. And as you can see, Sean and Monu also join that, so they will probably get a difficult question also from our moderator. And our moderator actually is a person, no stranger to finance. She has been working for a long time in the ADB in senior positions on finance, but she also brings experience from IFC and the private sector. So please, ladies and gentlemen, give a warm welcome to our moderator, Director General Christine Engstrom.
Thank you so much. It's really a pleasure to be here today, and a warm welcome to the Philippines despite the weather, but that's part of our discussion today, in fact. So I really want to welcome today's panelists. We're joined by leaders who are not only driving sustainable finance through their own institutions, but then who are also really shaping the financial ecosystem across Asia and the Pacific. So together we share the responsibility, but as you heard this morning, really the opportunity to build a greener, more inclusive future for the region. So I'm delighted to welcome our distinguished panelists today who bring perspectives from regulators, global banks, international standard setters, and financial institutions who are really delivering impact on the ground. So I'd like to first welcome Dr. Muhammad Faiz Azmi. He is the Executive Chairman of the Securities Commission of Malaysia. Second, Lynn Javier. She is the Deputy Governor of the Central Bank of the Philippines. Jacqueline Dove, she is the Managing Director for Sustainable Finance at Standard Chartered Bank. And then we're joined also by our speakers this morning, Sean Kidney from Climate Bonds Initiative, and then of course Manu Ratru from IIFL Home Finance from India. Welcome all. So, thank you. You deserve a round of applause, yeah. So we have essentially three different topics that we're going to be talking about today. So the first is kind of setting the stage for us in terms of where we are and what are the key actions that got us there, and then what are the opportunities. Second is then how do we scale sustainable finance in practice, and then importantly, how do we make sustainability inclusive, which is often a challenge for all of us, but we're seeing a lot of interesting solutions coming out of the private and public sectors. So I'd like to start today with Faiz. Malaysia has really been an early mover in sustainable finance. So from your perspective, what do you see as the key regulatory actions or reforms that really stand out in terms of being a turning point? And then what do you see that could be replicated across Asia and the Pacific, and particularly from your perspective being the chairman as well of the Capital Markets Forum for ASEAN? Over to you.
Thanks, Christine, and thank you for the invitation. As you pointed out, I wear two hats. One as a regulator for my country and as the chair of the 10 regulators for the ASEAN region. So the story kind of starts in Malaysia. In 2014, we came up with our first framework for sustainable bonds. And that was, what, a decade ago. I wasn't really around as a regulator then, so I have no idea what started it. But what I could see from that point was that because we started a framework, it was much easier to get the banks focusing on what they should be doing next. And I think that's the first lesson. Sometimes regulators have to be facilitative. You might have to create a framework which no one particularly wants at a particular point in time, but you do hope that over time they realize, oh, but we do have something. So that's our story. 2014, we had the first bond, which is quite small, about 20 million US. But what I realized is that in that decade, although there has been pickup, I don't think we see the opportunities and the risks really that we should. So for example, it was only about 2 years ago in Malaysia that our government suddenly woke up to net zero. And then things moved very fast. We came up with a plan as to how do we move from fossil fuels, which is probably about 80% of our power generation base, to something like 20 or 30% by 2050. And then it started the whole movement towards trying to understand how much money would it take. The answer is 300 billion US. And now you can start to have conversations with banks, with what we call GLICs, large funds, about how are we going to raise the money to be able to do this. So that's the second point to say, that frameworks start conversations. Of course, it'd be good to have Sean come and scare them as well. It's the first time I've seen Mordor as a picture of the world. Thank you for that image, which I can't now forget. And thank you, Christine, for organizing a typhoon so I could actually experience
My pleasure.
my first typhoon in the middle of the Philippines. The other thing we also realize is that it's very difficult as a regulator in a particular country to sometimes get the politicians to focus on things. And so that was the third message. We realized that if you do things at the ASEAN level, it's so much easier going to my government and saying, well, everyone else is doing it, shouldn't we? And that's what happened with the green bonds. I mean, in 2017, we essentially had an ASEAN green bond standard. And it then started a different conversation locally saying, well, we have this already at the ASEAN level. What are we going to do about it? And that storyline continues even today with the ASEAN taxonomy. Now, again, we can't claim credit to come up with the ASEAN taxonomy. We, of course, looked around the world and we found the European taxonomy as a good starting point. But then we realized that no taxonomy will completely fit every situation. The taxonomy in Europe makes sense for developed countries, but for countries in our part of the region, we're still very wedded to coal as a power source. And so in our taxonomy, we had to build this amber category, which is for transition. Now, some might say it's a cop-out. Why don't you just start with where you intend to be? But the reality is you can't get everyone across the line at the same time. So you need to build in these things. But of course, then there's peer pressure to get people to move along. So that's another example of something that we're discussing at the ASEAN level, which we intend to bring down into our various jurisdictions. The final point maybe just to say is, from an ASEAN point of view, it's interesting, for example, an adaptation plan. It's very difficult. I mean, it's easier for transition because everyone kind of knows what your power needs are. Okay, maybe 3 times more for air conditioning, and kind of extrapolate what your genset requirements are 20, 30 years down the line. But when you have a conversation about adaptation, you really don't know where you are starting with. We are also concerned about the things that Sean mentioned about just the sheer volumes of water. So I was commenting to Christine yesterday that it was a bit of a horror moment for me when I realized that humans need 3.5 liters of water a day, but my one palm tree needs 20 liters a day. And they're drinking the same water. It's treated water. Now, imagine in a drought, I have to make decisions. Do I give the water to the people, or do I feed my plants, which is key part of my economy? So it's beginning a different kind of conversation, trying to bring a future kind of situation into the room to have a discussion, to kind of get the politicians to focus on it. But certainly the Malaysian experience has been that they're beginning to get it. I've now noticed that politicians are also beginning to talk the language of climate. So I'll just stop there, but the basic message is that we have been experimenting as a country and as a region. We find it very useful to do things at the regional level to bring it back down to countries, but it's not a one-size-fits-all. We have to figure out how to get everyone across the line.
No, thanks so much for those good thoughts and comments in terms of Malaysia's perspective. So I want to move over to the Philippines, to Lynn. So the central bank here, the BSP, has really progressed in integrating climate risk into supervision. I think we'd all be curious to hear what were the challenges, especially in terms of how did the banks respond to it? How did you overcome that particular obstacle, if there were any? Thank you.
Thank you, Christina. Thank you for inviting us to be part of this forum. Basically, when we initially exposed the draft on sustainable finance, 3 issues were raised, very relevant issues raised by the industry. First one is on the timing, because we issued it in 2020 at the height of the COVID crisis. Second is the potential unintended consequences. And the third one is where they felt like they were overreaching as to shaping the behavior of their clients. On the timing, we saw it as a great opportunity as they review their strategies and vision. We thought that incorporating sustainability principles in their strategies, visions, and objectives, it's very timely at that time as they are reviewing also their digitalization initiatives. And we leverage existing regulations on corporate governance and risk management. We highlighted that while this is a new risk trigger, this goes through the same transmission channels, and you have to be aware of this risk. On unintended consequences, this is quite tricky because hastily pivoting to green financing might affect the power supply in the country, as well as this may have unintended consequences to the vulnerable sector as well. So it requires extensive engagement with different parties, engaging with the industry, engaging with our fellow financial sector supervisors, and engaging with relevant agencies of the national government. So we issued this in line also with the Sustainable Finance Roadmap of the national government through the Green Force when we introduced the Sustainable Finance Framework. So alignment of expectations, objectives, and clearly communicating that this doesn't mean that you would immediately cut financing to the sectors or increase your rates, increase your fees, especially for the vulnerable sectors who are having difficulty to adjust. The third one is on the impression that it seems like the central bank is overreaching. Again, we're talking about risk here. The risk to the bank's financial statements, and if they are able to manage this risk. So our expectation is quite clear. You also discuss this risk to our clients. The narrative has changed since the time that we issued the circular. They're now supporting their clients in terms of not basically transitioning, but understanding their risk exposure, and that's very important. And now as they see the risk, that's where the opportunities would come in. We issued regulations providing incentives to banks, 0% for bond issuances, sustainability related bond issuances, as well as providing them with an increased single borrower's limit to support the development projects also of the national government. So as banks see the risk, they were also able to take advantage of the opportunities to finance, especially adaptation projects, as I recall now, to channel financing to adaptation projects, which is quite also challenging across the region. I'll pause here. Thank you.
Thanks so much, and I like the balance between showing them the opportunity and then also, also sharing with them in terms of what their risks are and what they need to really look at. So Sean, first of all, thank you so much for the great speech. And one of your slides had the overall issuances, the increase, I think it was from 50 billion to 6 trillion now, the bulk of which is in the sovereign sector, right? So I'm curious from your perspective, what really drove the growth in this particular market? And then importantly for our region here, Asia and the Pacific, what do you see are the missing ingredients to really help us to grow into these types of issuances as well too, and I guess especially from the private sector side?
Well, what drove it was an increasing awareness on the part of investors about climate risk and trying to figure out what the hell they do about it, because most of their investment methodologies are short-term horizon, 5-year. Yet the actuaries on the pension and then insurance companies are saying, this is a disaster, we're going to be ruined, it's going to be Mordor, etc. And how do you manage the two? So the green bond was an instrument designed to manage the two. So it's an instrument that walks and talks like a duck. It works like a short-term bond, a vanilla bond, but it's got a bonus feature, an extra feature, which it addresses long-term risk because it allocates funds accordingly. Very simple instrument. And I have to commend the Malaysian Securities Commission and the ASEAN Capital Markets Forum, and I've got Sunny in the front row here who's involved in doing that, for their work in promoting green bonds in this area. But I also have to commend SEBI. I have to commend above all the People's Bank of China, which I was a member of the Green Finance Task Force in 2014. And the second part of the driver was regulators got behind this. This has been an extraordinary win over the last 10 years. The People's Bank of China accepted the recommendations we made in the Green Finance Task Force about creating a green bond regulations, about creating a taxonomy based on the climate bonds taxonomy. And bingo, the Chinese market is massive, is now on track to be the largest market again this year in terms of national green bonds market. But other regulators picked it up. So, those two things have come together. Of course, the benefit of regulators taking this seriously has been an underlining of risk issues involved in climate change. As regulators, and I'm thinking of the Network for the Green and the Financial System, the association of 150 central banks around the world, have talked about the risk issues. It is only further encouraged, driven investors to say, we've got to try and do something about this, and that's been, in the short term, green bonds. Of course, it's more than that, right? They now have green equities, green finance of all sorts, but that's been the big part of it. The bond market's the world's largest market, $140 trillion outstanding. So if we get it right in the bond market, the rest of the world follows. That's the way it works. So that's really the driver. I want to say that the appreciation of the extent to which we have to transition our economies is the latest development amongst not only regulators, but also amongst investors globally. We have extraordinary demand now appearing in multiple markets for green investments that are about becoming greener. Now, I'm deliberately today saying that becoming greener isn't just reducing emissions, it's becoming resilient as well. We already have about 18% of the $5 or $6 trillion market being resilience focused. We need to grow that to 50% of that market, and that's going to happen in emerging markets. But the idea of becoming greener, of transitioning, is absolutely core to the global agenda now, and investors are ready. Bring it on.
Thank you so much. So we've given you a little bit of the context in terms of, what's been driving the markets and where we are right now. And I want to move over now to the second topic, which is really about how do we scale up? How do we scale sustainable finance? So I want to turn to Jacqueline from Standard Chartered Bank, which, as you all are aware, operates across many emerging markets as well as developed countries too, and talk to you about investor demand. So where do you see the strongest appetite for sustainable products? Where is demand lagged, and what can we do in terms of what needs to happen to address some of the lagging markets? Over to you. Thank you.
Well, firstly, thank you very much for the invitation. It's great to be here. It's always really hard to follow Sean, not least as he just steals all your content on what we need to do and where it needs to happen, but says it in such a passionate way. And I don't want to repeat, I think, a lot of what Sean has already outlined in way of those that are in the forefront. So we spoke around China, Europe again. We see the same in Singapore and Hong Kong from a sustainable finance product perspective and investors' appetite in there. But I'll just build upon what Sean was saying now. The reason for that quite often is from a regulatory framework perspective. Very clear direction, the ability for investors to, again, see what's reported, data from that. Sean touched on the sort of green bond issuance in China. You've seen in Hong Kong and Singapore green digital assets, again, being driven by regulation and creating that green innovation hub within those markets. I think a lot of it is to look at where can investors get that risk-adjusted return, where do they have the transparency, and then where is the regulators put a framework in place that allows that flow and investment of capital. It's quite the opposite. So you touch on laggards. Where you don't have that, those are the economies and governments that are then sort of struggling, or there's more work to be done. I think the fragmentation in way of regulation needs to be addressed. That then will help, again, the flow of capital to where it's needed most. But there is a lot of innovation. I think Sean touched on this in his sort of opening remarks. I always see it almost like a hose pipe that's got a kink in it. You've got this sort of fixed income market that's trillions and trillions of dollars, and it's absolutely there. You've got solutions, you've got innovation. And unfortunately, what we need is the ecosystem or the architecture framework around that to sort of unkink, and that's the regulation and the governments to help with that, to allow that flow of capital. And then I think it will catch up. But again, we're seeing, as Sean had mentioned earlier, we're seeing those areas that are sort of really getting that investor appetite because they've created the frameworks around it and enhanced sustainable finance regulation.
Yeah, no, thanks so much. I appreciate your feedback. So turning back to Sean, so we've been talking about the growth of the green bond market, the need to focus on resilience. But from your kind of broader perspective, what are the other different types of financial instruments that will be needed for Asia and the Pacific to really push sustainable finance? What are we missing here?
Well, we're not missing, it's actually happening. I mean, the loan market is huge. The green and sustainable loan market is already huge, including happening in India. So that dwarfs it. It's a derivative. It's flowing on from the bond market, the big mother of markets, and the lessons we've learned in that market of making sure that we can do well by doing good have now washed through to the loan market. Standard Chartered doing a lot of loans, for example, and is washing through equities too. So we've started seeing, companies coming to market, looking to IPO, who are now branding themselves as green in ability to win market share and win more equity and so on. So this is washing through. And of course, policy is the other part of it, because of course the essence of this has not been to grow market, it's been to encourage governments to do more in the same way. The Banco Central of the Philippines has done more to encourage this market with its incentives for green bonds and so on in the Philippines. There's a lot more that can be done in that area, both in terms of incentives by central bankers, regulators. The People's Bank of China has a lot of incentives, but also in terms of policy incentives by governments to encourage the right kind of things. I mean, all governments need to do what the Danish government has been doing and the Singapore government have been doing, is review all of their portfolios in the context of climate impact, possibly transition. We need to change procurement guidelines for everything to ensure that things are future fit. That's just the engineering side of it. We need to ensure that the support for financial investments are aligned with building stuff that is future fit and lower risk, such as IFL housing, for example, and green housing. We need to ensure that our investors domestically are aware of, through central banks, of the developing agenda and reorient their investment policies accordingly. So across the board, there's stuff to be done.
Yeah, no, great. Thank you so much. I want to turn it over to Fayez. So you've already touched a little bit upon this, but we know that there's a lot of sustainable standards and taxonomies that are emerging worldwide, and of course, no two look alike. Would love to hear your views in terms of harmonization, interoperability, and then especially from your perspective in the ASEAN chairmanship as well too for ACMF.
Sure. But just before that, Christine, it occurred to me listening to Sean and Jacqueline that the presumption is if there's return, you'll find the capital. One of the things we realized among the 10 of us is that most of our governments are pretty borrowed up, meaning the headroom is not really there. And as a result, I think when all the climate adaptation plans come in, I think only 3 out of 10 have done it, the number's going to be quite frightening. And so we have started a project. So you talk about taxonomies. We have the ASEAN taxonomy. Within the ASEAN taxonomy is a section called EO2, which talks about adaptation. And so one of the projects we started this year is something called MARS, Mitigation, Adaptation, Resilience, and Sustainable Financing. And the problem statement is this: how do you fund an adaptation or resilience project which doesn't give a return? Okay? And for that to work, you do need blended finance. And for that to work, you need to be able to find a different bunch of investors or a different category of individuals. So for example, in Malaysia, we're 67% Muslim. There's a lot of money that goes into the zakat, which is the Islamic tithes. So we're having conversations with Sharia scholars saying that if your objective is to help the poor, what is the point of feeding them, giving them clothing and a house if they're underwater? So to what extent can we repurpose the conditions of zakat to also fund infrastructure projects? We are having conversations with very rich individuals saying, what would it take for you to put money towards a wall? So anecdotally, someone said, well, if you let me put my name on it with a different color, we might. So 2 miles will be family X, another color, pink, would be family Y. So be it, but we'll get the wall built. So I think that's something which we're exploring, which is how do you fund non-commercial projects, okay? Now coming back to taxonomy, as I mentioned, we tend to use these taxonomies more as a way to galvanize our governments. So the harmonization would be nice, but the reality is I don't think you can get one set of taxonomy that everyone can apply. I deal a lot in Islamic finance. You can have 4 scholars, 4 different views, and they're all correct. So we're quite used to operating in a regime where everyone has a slightly different view. So it's the same thing with the taxonomy. We don't try to say that with the ASEAN taxonomy you must follow, but we obviously encourage them, and that's why even within the ASEAN taxonomy, we talk about foundation and plus as a way of trying to say, okay, you should all at least meet foundation, but what can we do to help you move across to the plus part? And I think that's a more practical way of getting everyone across the line. The last point to say is that there are all kinds of taxonomies. I mean, we've started one in Malaysia called Maqasid al-Sharia, because we realize that there's very little literature out there about the relevance of climate to Islamic finance. Now, it might surprise you to know that there's actually a lot of hadith and areas in the Quran talking about the need to conserve resources, about the intergenerational wealth. And so what we're doing with the maqasid is to kind of amplify this to make sure that people understand that even within the religion itself, you are also compelled to do some of these things, right? So it's kind of putting a moral spin on it, but it's also to try and articulate where in the Quran or where in the Hadith are there instructions to us to do things. So that's why I would commend you to have a look at our Maqasid al-Sharia as come up by SE, because it actually starts that conversation, which up to now has really been centered around halal toyib, which is not very helpful. So taxonomies are very important, and I think this idea about incentivization, I don't know what it is. I mean, if projects make sense, why do I need to give you a tax incentive? But it's really bizarre. So every time we do a framework, the first thing the banks will ask me is, so do I get deduction for expenses? Can you recover my cost of the expert to, seriously? But okay, fine, we do that too. Whatever, whatever works.
I would say probably not cost expense refund, but definitely where we've seen a huge benefit, in Europe we've got the CR2501A regulation, which again, any project finance receives a 25% capital relief if it meets 15 criteria that's set out from an environmental or social aspect. Now, for a bank who's having to hold large sum of tier one capital, that's really helpful. And it's really driving the agenda for the nation to say we can extend more aligned to whatever the NDCs or commitments are for that government. So it's less about clearing my T&E, although that would be great, but more around how do we drive more green and social financing. Again, taking that kink out of the hosepipe to allow capital to flow where it's needed most.
No, thank you so much for those good comments. So I want to move over to India, to Manu. So as everyone heard just a few minutes ago, IIFL Home Finance has really done a great job. And it's actually a leader in the Indian green home finance market. And it's really taken a number of years. I used to work in India doing mortgage financing for a number of years. The concept of green housing and green mortgages was something that was just not talked about. I mean, in fact, it was very difficult just to get affordable homes built. But now that has really changed, and it's really exciting to see what you've done. I'd like to just hear from your perspective in terms of the standards that were existing when you started up. I believe they weren't there for you. The industry is growing up around you, but I'd like to hear a little bit more about kind of the context of how you operate, how difficult it was to operate without those standards, and now how it's progressed.
Yeah, thank you, Christine. So I think what we are contributing is so minimal, and so it's like a drop in the ocean. I think the issue, I'm sure we have the regulator sitting here, they make the rules. We have Sean who keeps on showing us the money, where it's lying and it can come in. We are the last mile connect, right? What do you do with the regulator? What do you do with the money? So we are the last ones where all of these guys come and sit on top of us and show us what you can do. So I think the housing sector, unlike energy and mobility, especially in a developing country, is so heterogeneous. That's the first problem. It's so heterogeneous. The construction techniques, materials are absolutely non-standard, right? So it's a very complicated issue to address this, and especially for a country like India, and we're 65% in the rural areas. So now, for us to make Sean's investor believe that what we're going to do is going to give the impact is the big problem. So when we started initially, I'm sure even with ADB, the proxy which was mentioned earlier was something which wasn't present in India. And we requested ADB that proxy is not going to work. There's another proxy which we have to work on. I think we've traveled a good distance since that time. And now we have the certification standard which are more relevant and more closer to affordable housing. So a lot of rating agencies have done that. However, I would still say the self-construction part still stays very open and very, I would say, devoid of how do you implement. And if you, I think the need at the moment is about creating an entire ecosystem. You can have standards, you can have the money, but at the end of the execution, how does it really work? For example, look at solar panels. They were extreme. This is a standard product. They were so expensive, so penetration was very low. Now, India is one of the leaders in the international solar alliance, one of the world leaders, right? So I think you need to standardize and economies of scale to bring down the prices of what you're going to do, right? For example, we were working with one institution, and they said fly ash bricks is the best solution for embodied energy, right? Now you don't get fly ash bricks unless you are closer to a thermal plant, and the whole world is moving away from thermal plants. So how do you get fly ash bricks? So what's the alternative to fly ash bricks to do? Because for affordable housing, the embodied energy, the partition wall itself is so big. So the real need at the moment is to have customized solutions, and that's what we are currently doing, is to find alternates to fly ash bricks, and which are easily accessible, cost effective, and then to do this. So we are working parallelly, if I would say so. We have existing standards, which we are trying to dabble with and ensure that we do this. But the scale up of penetration will only happen if we will have solutions which are more cost effective and easy to implement as well. So our journey has been, and I think for any financial institution, especially in developing countries, we will have to take it upon ourselves, and we can't expect some technical committees to come and help you out. So that's why we have a separate technical division captive. 15, 20 people just work on this, although being a housing finance company, we don't need to have them, but we have them because we realize that that's the only way to bridge this gap and stand out from the others, that we ourselves are having technical people to the know-how to take this forward. So I think we are at a cusp where the RBI also is trying to lay down some framework to help, like what she mentioned for Philippines, to the regulator to go and measure the climate risks. As of now, for the construction climate risks, there's no framework available for the lenders to really look at. So I think as far as we are concerned, I think it has to be seen, you have to have your own technical expertise to be able to implement. At the same time, at the other level, what we have realized is we are trying to create a backward integration of funding those through MSME loans, through the people who will manufacture the material which will be used for sustainable housing. So that's another line we are trying to toe. That is another interesting line which we're trying to toe, so that we fund those people, that they give those materials locally available, which will be a forward integration into the houses we get built. So that's the second phase we are trying to do, so that the scale up happens from there. Yep.
No, thanks so much. That's really interesting to hear about your journey in terms of really pushing the market and addressing that from a very holistic standpoint and down the value chain. And I think that's a really good point for us to kind of reflect about it. Sometimes it's not just the governments that are putting in the standards, but you yourself have to drive that business and seize the opportunity and push some of these more ecosystem types of approaches. So I want to turn now to sustainability and inclusivity, a very important point for us all here in Asia and the Pacific. So I want to turn to Lynn first. So in terms of central banks, they typically aren't really looking at the households directly, but in the Philippines, how has the central bank tried to and convince the financial sector that inclusion is indeed part of resilience?
Basically, for the BSP, financial inclusion is not just an advocacy. It's actually an important component in carrying out our mandate of promoting financial stability. So we go beyond ensuring that Filipinos would have financial transaction accounts. It's about promoting financial wellness. They have the products, insurance, credit, savings, to not only to be able to have something to spend for their daily needs, but also their ability to withstand shocks. So having said that, if we strengthen the resilience of communities or households, they'd be able to open their communities sooner, payments would flow, and then the economies would stand on its feet. So this is actually a very important principle in promoting operational resilience in the banking industry. So for smaller banks, our expectation goes beyond developing small ticket products for their communities. It's actually enhancing their resilience. based on past experiences, after every extreme weather episodes, it's the smaller community banks that actually open up their doors and provide financial services to the affected communities. And they see their important role in this space. That's why one of the industry associations here is developing a disaster or a calamity playbook that could be used by the smaller banks. So having said that, and having seen these experiences and observations, we are also tightening our regulatory relief measures that they could avail of after they've been affected by a calamity or extreme weather event to ensure that they may be able to provide financial services through disasters. And the BSP has also sharpened its strategic objectives. We are mainstreaming inclusion in the sustainability agenda. This is in partnership with different stakeholders, especially the industry, to allow them to strengthen their resilience amid disasters.
Oh, thanks so much. That's really interesting. I want to move over to Jacqueline. So, in terms of private banks, it's often difficult for them to see the business case for sustainability and inclusion, although I know Standard Charter prides itself on being an inclusive and sustainable bank. So maybe we could talk a little bit about Standard Charter, how you made that business case for your own bank itself and then for your clients as well, too.
So just a bit of context, and I'm sure many of you in the room know Standard Chartered, but we're headquartered in the UK, but operate in 53 plus countries. Majority of our revenue is driven out of Asia, Africa, and the Middle East, and those markets that are most impacted by climate change. And that's the communities that are in those markets too. Now, for us, it's about doing good, but more importantly, it's also about the commercial opportunity, and that goes hand in hand because, again, we have shareholders, we have to show the return, we want to have an impact, but it's not an always easy one to balance. However, it's been spoken about quite a lot on the panel, and Sean mentioned in his, there's a financial performance opportunity, there's resilience, and then there's risk diversification from an investor perspective. There's a number of surveys and reports. McKinsey has done one, BCG recently published one as well, where if you look at Asia Pacific, for example, there's a 4.5 trillion opportunity of getting women or more gender equality in Asia Pacific. But today, there's probably about a 1.7 trillion gap in female investment provided. So I think huge opportunity from that perspective. Again, there's cases of startups that are either founded or co-founded by women that outperform those of their male counterparts by almost 10% in the first 5 years. So huge opportunity to be able to, again, find that investment, but also the risk diversification. So for us, it's around ensuring that our communities and those that we finance and the organizations that we finance are diverse, and of course provide that opportunity from a growth perspective. Again, and I think Sean touched on this quite a bit in his opening remarks, when you look at having a very diverse community, the ability to repay from a government perspective is a lot higher. And again, for us, that's a positive business case.
No, thanks so much. Go ahead, Faiz. You want to jump in?
Oh, right. So luckily, I don't have a P&L as a regulator. But what I've noticed in Malaysia is that we have a lot of very well-meaning people, and they get scammed a lot. So some countries have charity commissions, mine doesn't. So the Securities Commission in Malaysia is launching a social exchange, very much inspired by SEBI and what they did in India. And the idea is that charities will pitch what they need on the social exchange, and we will regulate them, right? And this is to give comfort to whoever is donating money, that this money will be at least regulated. It's not strictly part of my capital markets mandate, but it goes to the inclusivity part, because every dollar that gets stolen by a scammer is a dollar less either to charity or the capital markets. So that's something we're doing to kind of address the inclusivity bit. The other one, which I know is a national program, is getting women back to work, because we realize in Malaysia that the percentage of women who, after they have children, coming back to work is actually very low compared to other Asian countries. And so, I'm trying to get people to come to the SC and have a look at our creche. We've had it for 25 years. And it's surprising how often that comes up from staff as being one of the reasons why they stay. is because they have the ability to leave their children there for the day, check up on them during the day, and ultimately they know they're safe. So the inclusivity part takes different facets, but I would say that one of the things that does worry me is what Sean raised, which is the ability to get back to normal quickly, right? In fact, part of the reason for Mars was I was in a conference a year ago in Durham, and they were showing the effects of the Pakistani floods and how 2.5 years later they haven't got back. And what surprised me was the mental health issues, the domestic violence levels, and everything that had gone up. So it's not just the economic loss, but it's actually the unraveling of society when those kind of things happen. So I think it's incumbent upon regulators to sit back and think, well, how do I incentivize insurance companies, banks, and parties in the system to build some flexibility? So I know that some of my Islamic banks are now talking about reserving a percentage of their profits so that if there's a disaster, they've already built that in. There is a reserve for disasters, but that's not widespread yet among the banks. But we need to start thinking about the ability to have some way of absorbing these losses, right? And the last point I'll just raise is this. We had a very strange situation where 20 years ago, one of our agriculture banks realized that every time a farmer died, they would have to end up suing the widow and the sons for the money. So they said, for $2, if you die in the year, it's written off. After about 3 years, I was the auditor then. They called me up and said, we have a problem. No one's dying. And this fund keeps on growing. And what do we do with it? So I said, what do you want to do with it? He says, can we do it for training? And I thought about it because it's a 1-year contract, so there's no long tail to it, right? So I said, yeah, I guess you can use it for training. And so the point I'm trying to make is that sometimes we need to think of slightly out-of-the-box ideas to build those reserves. And that particular one was, of course, as an auditor, I said, does it follow the Insurance Act? No, it doesn't. He says, because who's going to insure a farmer? But for $2, it became a very successful program. And the best part is they didn't have to sue the widow.
So you raised a really important point, and that's actually the discussion that we'll be having tomorrow on financial inclusion and financial health. So really expanding that concept, going from access to finance to resilience in terms of small pensions for people, in terms of insurance as well too, so that they can become resilient and then come back after these disasters that will keep coming at us essentially. And I also wanted to add, and sorry to plug ADB since we're sitting here at our headquarters, but so some of the multilaterals, what we're doing is we're working with governance to create contingent disaster risk facilities where there is already an approved amount that's on standby that can be quickly dispersed, and of course then sent through different types of social channels that wouldn't normally reach it as quickly as in the past. Of course, that's very heavily reliant upon digitization as well to make sure that they get those funds. So that's something that ADB is looking at, as well as bringing in more insurance. But definitely, insurance is a missing ingredient out here in Asia. It's critically underdeveloped, and it's an area that we all need to look at in terms of risk pools to diversify risk, especially for a lot of the catastrophes in the region, but also then our protection gaps, as everyone is starting to talk about here on this panel. But I want to move over back to India, to Manu. In terms of your particular business model, how did you balance profitability, risk, especially given your target segment, affordability, and then the sustainability angle? I'd be curious to hear kind of that balance there.
Yeah. So actually, for any financial institution, risk is number one. The financial risk is number one. You can't be skewed towards, sorry to say, just because of the climate risk, you can't end up lending to people who are going to pay back, right? So I think that was the first thing which we need to take care of, the informal segment. For that, what we did was that we've been observing in India is that the moment people get into affordable housing, scaling up their business is a problem, right? So that means you end up being a 1 or 2 state kind of a specialized financial institution. After that, you're not able to scale up, right? So we are one of the largest affordable housing companies in India. And one of the key reasons, enablers for us to be able to do was, we looked at a very different approach. Traditionally, India has been a more brick and mortar, underwriting model. That means you have physical branches, you have credit managers going physically and doing it. So that has a limitation to what you can scale. We transformed it and put it a more digital ecosystem about 8 years back, which took us a while. But we were able to standardize credit underwriting norms, and the informal income segment, which we felt we took a very different approach. One is you can assess somebody how much he's earning. We said how much he must be spending is another way to look at his income, right? That means if you're staying in a city which is a metro and he has 2 children, he must be earning this much to sustain himself, rather than to say how much he's earning. How much he's earning is a very difficult, complicated thing to do, but I can always say that if you're staying in the city and you have 2 children going to school, I'm sure you must be earning this much, right? So this was a very underwriting at that point in time, quite a, I would say, an opposite view we took about underwriting. That was number one, and put it into the system. So technology-wise, you were able to scale up. So that is number one, that you can scale up standardized underwriting without human intervention. That's number one. Number two, the aspect of actually ensuring that the good thing about housing is that the end use is very well defined. That means you know where the money is going and you can see the progress of this whole place. So we very carefully undertook the projects where people are buying. So that was a number two very important criteria. Once you know the cash flows are good, then the projects which they're buying the property should be very neat too. Third thing which we really employed was to socialize this whole idea of what you're trying to build on sustainability. For example, in India, you have CSR funds, right, which is 2% of your profits need to go there. Rather than putting some generic use, we have a framework under the CSR, which we primarily talk about sustainability. So we've been putting a lot of our profits, any which ways you have to spend that money for something. We are using that money for educating. We are using that money for research and innovation to socialize this idea of how sustainability needs to be done. So we got funds, which anyways we're going to spend from CSR to do this. So that was the number three thing. And number four, which we did pretty, I would say, pretty well, was to shoulder with the government. Government has been quite forthcoming in this affordable housing in general. So we worked with them in some states as a specialized projects where we could scale up much faster because the government was supporting us. I'll give you an example where I give an example of borrower-led construction in Andhra Pradesh, one of the states. So they are one of the more evolved states where they have an application wherein I get everything on the application, the photograph, the lat long, the name of the customer, what subsidy they have given on a click of a button. We did an API integration with the state, right? So I could underwrite much faster. I didn't need to go to the site to see the progress of the site, right? And third, I could see the government has also, because the bank account was also linked with it. So I think these are those customized things you need to work with. And in India, certain states, governments are pretty, I think, progressive, even in the technology side today, that this was one of the first of the kind we did in the country. So like these, you can really scale up. You are sure of the credit. You are sure of the end use being there. So, but the core in this is that as an institution, you need to be very tech savvy, I would say. That's the only way for the future to scale and sustainable. Yep.
Yeah, no, thanks so much. I want to see if the panel has any other comments on this topic. Lynn?
Just a quick comment to what Faiz discussed earlier about regulators should look at incentives or support to affected banks, particularly those located in areas frequently experiencing extreme weather events. One of the challenge actually, as is correctly mentioned, is that the provisioning or allowance for credit. This may sound technical, because regulators seem to require banks to provide for allowance for credit losses, particularly for their portfolio that are also affected by an extreme weather event. So in partnership with the industry, this is where multi-stakeholder engagement would come in. The regulators must understand the length of time that we should give our banks to provide for this allowance for credit losses, to give them some room also to extend loans to affected communities. Otherwise, if you require them to book provisions right away, it will eat up capital and would limit their room to extend or provide relief to affected communities.
No, thanks. Good comments.
If I can just talk about resilience leading to better interest rates, which is what getting better capital. What are the predictors of resilience? Well, one of the critical predictors is stronger communities. The ability to bounce back is correlated with strong communities. In, I think, a study that San Francisco did, death rates in earthquakes are 40% lower in strong communities. People help each other out and save people. It makes sense in a typhoon in the Philippines as well. So how do we build stronger communities? There are two things we've talked about today. There are many things, but there are two things that are really important. One is digital inclusion, getting people access to their finance, everyone access, women as well as men. And we have emerging markets leading the way here. Europe is way behind. America's way behind. The leaders, UPI, Banco Central de Brazil, I mean, even China, WeChat and so on. And I think someone from the Georgian Central Bank here is going to be talking later this week about their efforts in this area. We have a lot to learn in the West from the digital inclusion measures in central banks. I'm a particular fan of the Banco Central de Brazil's universal banking systems. One, but two, gender. So gender is in many different ways. Participation of women in society on a full basis is really critical to strong communities. That affects health policy, that affects welfare policy, that affects education policy. It's also, by the way, really critical to central banks. Why? Because default rates on small loans. I mean, Indusund in India, that runs one of the larger microfinance programs, no longer lends to men because the default rate amongst men is 20%. The default rate amongst women is 3%. Duh, we've got something we can do here. We have to make sure there are more women able to take microfinance loans if we want to improve the financial resilience of our banking system, et cetera, et cetera. So you can sort of see, just what I'm really trying to say is the education, the primary education of women is a financial and climate resilience investment. And if you start following through how we create a stronger community, there are many such things like this that we just haven't been putting two and two together about.
I think just to build on that, and Sean's absolutely right, we issued our inaugural euro, it was our first actually, 1 billion euro social bond earlier this year, and we were oversubscribed, predominantly from Asian investors. And we had new investors to that bond as well. And that is focused on ensuring we can support small, medium enterprises, but more importantly, women-led small, medium enterprises across Asia. And again, that's to drive not only the education and the support, but really, again, the communities that we support because of the risk diversion and because of the resilience that it provides. And again, it speaks volumes that it was oversubscribed. We've also established a social sustainability working group that really cuts across 5 innovation hubs that we have in the bank. And those innovation hubs are looking at some of those innovative ideas and some of the new structured financial products that we can look at incubating them to then be able to think, okay, how can we then launch these and then scale these across our markets? And across all of those, thinking about what is the social, whether it's related to carbon, nature, again, blended finance being one of the instruments, adaptation and resilience, but what is the social impact it has across our markets?
Yeah, that's fantastic. Congratulations on the bond. Last word over to Faiz.
Sorry, I'm a capitalist. I do worry a
Maybe
little
not
bit
the last word here.
about,
No, go ahead.
about putting the onus upon companies and banks to try and save the world. That said, I think the evolution of thinking is that it's not about shareholders only, it's about stakeholders. And we do need to get companies and banks to think about what is their impact to the community at large. So one of the things we're kind of testing out in Malaysia is this, and maybe an anecdote. There was a time where everyone complained that the government was taking too much, or rather the subsidy of petrol was not good enough, and meow, meow, meow. So every time you took a litre of fuel, it would say, the real price is 5 ringgit, but the government subsidized 3 ringgit, so the cost to you is 2, right? So in other words, it made it very clear to the consumer that actually someone did subsidize it, and this was actually the real cost. So I was having a conversation with some of my listed companies saying, you all say that it's not fair that all these good works that you do out there are not given credit by the analyst, right? And to some extent, particularly if you're a government-owned company, there is, shall we say, an obligation to society, which is kind of baked into the requirement of being a government-linked company. Of course, if you're in the Middle East, it's probably a sheikh-linked company, but it's the same kind of concept. So we are kind of toying with the idea, should we get them to do a pro forma to say, to price, what is it that they do for the community, to kind of show it in financial terms. In other words, your dividend was $3. It could have been 4 had you not done $1 worth of these efforts. Now, by making it explicit and putting a number to it, firstly, you kind of stop selectiveness. You're actually making them more transparent as to what they're doing with the money. But it also means to the stakeholder, they can say, okay, the return may not be great, but I can see what impact this company does. So as an analogy, we have a thing called the Pilgrims Fund. And the Pilgrims Fund was set up to essentially encourage Muslims to save money to go on Hajj. But the returns of the Pilgrim Fund are not comparable to other big funds. But most of us are okay with it because we know that that 2% difference between what they pay and what the other funds are paying, that 2% goes towards subsidizing the cost of Hajj for the people going. We know it pays for something like a third of their staff go off to the Holy Land to look after the pilgrims. And so we can see the value of this organization and we can accept a lower return because they're doing good. So it's a thought, right? Because we're trying to figure out if a company is going to do good, if they are going to give back to the community, how do you reduce it into financial terms so that analysts and their shareholders understand, and at the same time there's using transparency, a way to make sure that it's not selective.
Yeah, no, thanks so much for the interesting comments, and thanks very much to all of our panel here. So we've talked about essentially what's the state of sustainable finance market, how did we get there, how do we scale it, and then importantly, how do we make it inclusive for all? So you'll be diving more deeply into these discussions over the next day, and they'll be across 3 different streams. So the first is inclusive financing, green development, second, markets and policies, and the last, innovative sustainable finance through data and digitalization. So please join me in thanking our wonderful panelists today. I really appreciate all of your great comments. Yeah, thank you so much.